Good afternoon, everyone, and welcome to the Daily Volatility Box report for November 29th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we'll talk about the trade that's set up in the bond futures, and this was right before the market closed. We had a shorter Friday today, so some of you may have passed up on this trade. Again, perfectly valid. For those of you that did take this trade in the bonds, your risk reward was pretty phenomenal. You were risking only 4 ticks, so let's actually pull this chart up before we dive into details. So if I can maximize this, and Thinkorswim has been glitchy all day for those of you that have also faced something similar. But now if we expand out, so the trade set up as price slammed into our volatility box right here. And this is our first signal telling us that yes, it was okay to be looking at the bonds for an entry, right? And we've talked about this many different times. So keeping in mind that today is a Friday, it's a holiday week. We also know that it's a shorter Friday. You may have chosen to be a bit more cautious, in which case you might be waiting for these dynamic RSI candles to give you that color confirmation. And if not, then you might be looking at the normal volatility box entry where price slams into our entry line right here, and your stop is outside of the volatility box, and your target is the exact same what we risked, right? Which in this case was, I think, right around 6 or 7 ticks. I think 6 actually. And so we ended up making that same 6 targets, and that's if you took the trade on a normal scenario. Now, however, if you waited to have these confirmation candles, then the first confirmation was really as we went from green to yellow to orange, right? And orange is our first bearish sort of candle. And this zone right here is what I think you would be looking at as confirmations using a 3-minute chart, which we've talked about in previous videos, is a really nice sort of middle ground between that 1-minute and that 5-minute chart, right? And so using that, our actual entry came after this candle right here, the close of this candle. And so the price that we entered at was right here at the close of this candle and the next candle. You had plenty of opportunities to get in, even better prices, right, multiple times before you ultimately had that puke down lower headed into really what is the close of today's market activity. Now, one reason why you may have passed up on this trade is purely for the sake of this is just towards the end of the day of a Friday trading activity where you don't really have much time for follow through, especially to that T2 level, right? And so the T1 gave you, so here, for example, our risk was 4. And we had reduced that down by 2 ticks by essentially waiting for this confirmation. And we were able to then still get that extra 2 ticks from a risk reward perspective in that follow through, which made this trade really powerful in the idea of waiting for confirmation signals. Sure, it was sort of a Friday end of day trade, but I think that's where when you have a risk reward skewed in your scenario, that makes it a little bit more acceptable to take that trade, right? In this case, I think we were risking close to 1 to try and make 1.5, maybe even 2. And I think that's the power of waiting for these sorts of confirmations. Now, one more trade that we'll take a look at is in a stock DTIL. And DTIL was found using the IBD stocks on the move watch list that we talked about a few days ago. Thanks to another member who found that out, Dan, if you're watching, thank you for that. But that list ended up working out pretty phenomenally today. And so if we take a look, we'll look at this on the aggregate scale here on the daily chart, since a lot of you do enjoy swing trading. And I think this will be the example of the sort of swing trading entries that you might be looking at, right? So we see here for the most part, DTIL had been trading close to sideways or chopped to sideways, maybe a slight grind down lower. And then we see it started to make this move up higher, right? And so in this sort of scenario, I think it's very hard to argue that this chart does not look bullish. At least for most of you that would be looking at this trade, if you're on a daily chart, the trend at least tells you that you're in a bullish scenario. We could even layer on things like, say, our market pulse if we really wanted to get confirmation of that, right? And so if we layer on market pulse, we can see the stage is an acceleration, giving you the confirmation that you have a bullish bias. And using that bias, we're looking only for long entries, right? And so now if we take a look at this chart, today's activity is what we'll focus on, but what we can also see is most of the time we've closed towards the higher end of the day, breaking outside of even the volatility box, which we've talked about in several videos, really represents whenever we break outside of this volatility box, a trending market using statistics and actual models as opposed to technicals that you might be looking at, right? And so really the first sign that we knew to look bullish on DTIL was the break of the volatility box right here. Right, and so this is your sign that tells you, yes, DTIL, you're looking on the bullish scenario. You could have started to look at either using, well, I think in DTIL's case, you had to use stock, but if you could use options, then this might be the place where you're setting up a play. Now, if we keep an eye out for where we actually had a short opportunity set up, That was exactly here today. Is we caught the wick in the price falling down already in a bullish scenario. So that was the first thing. We had our bias confirmed of bullish. Then we waited for our actual concrete levels, which were plotted as soon as we had the open. And so we had price fall into our volatility box lines. We were able to pick this wick up and still continue to carry out a bullish trade in an overall bullish chart. And now for those of you that are swing trading, you might be looking at this for, say, a longer term entry. But for those of you that are even looking at this as a day trading entry, you hit more than your first target right off the bat. And for those of you that are looking for a swing trade entry, you had a phenomenal price as your entry where you're already up a decent amount on the actual stock. I think you're up close to 3% based off of where our actual entry was, right? To where we ended 4.38% from the entry, where this volatility box at least gave you an entry, which is right around 75 cents based on what you might be looking at. But I think that is really where the power of the volatility box comes in, the ability to scan thousands and thousands of tickers instead of just our 8 futures markets. However, even our futures markets today gave us entries in the bond. So it's really pick your choice. The volatility box is giving you both stocks and futures, and it's up to you to determine where you'd like to take the power of the volatility box and implement it. Hopefully this video helped you at least understand how to use the volatility box for stocks and futures. For our Futures Volatility Box members, with our update this Sunday, we'll also be sending you the invite link to sign up for the Volatility Box, the stock version, for 50% off before the end of the month. And so for those of you that are interested in that, keep an eye out for this Sunday's email. That's where the link will be attached. For anyone interested in subscribing to both the stock and futures box, really today and tomorrow would be the absolute best days since you get the stock volatility box for 50% off. And after that, it'll be the normal price of our promotion for the stock volatility box. All right, hope you all have a wonderful weekend, and we'll look forward to seeing you on Monday's nightly video.